with a almost brand new account, but it's around break even. It's gonna be a good day to showcase my edge potential and showcase scalping's potential. If we get closure here, I'm entering, but we have 2 more seconds, so we're probably gonna need to wait for the second candle here. Candle closure is probably like one of the most one of the like non-negotiable things that I have right now, like trading with no rules, because it's the very least like you should wait for, right? It's the very least. I don't need to wait necessarily for displacement, but when I'm taking entries, I always have zones that I'm waiting for price to close above, and it's just important to have it. It's an important confluence, actually, more important than displacement. Displacement is not required. Like if we see here, if we're inversing, we don't have displacement. Displacement doesn't matter that much. This is like a half matured as a trader. I realize like displacement or seeing a gap necessarily, like most of the times I want to see 2 candle closures. Like if we get 1 candle like this and it's just like 1 candle, right, and it barely like tips over the closure, it's kind of invalid, right? It just kind of is. Most of the times you want to see like almost like a whole body like close above, right? Or even with 1 candle, like you really want to see movement. For example, I would really want to see like at least something like this. Generally you want to see a big body close above, like not like this is not even like 10% of the candle, right? Yeah, here I'm executing. I'm not fully waiting for a candle closure right now, and I'm gonna explain soon why. I have an interesting thing that I do, which is, for example, we get like an iffier candle closure, is I wait for behavior from the next candle. And yeah, we're just looking to target the size. It's simple. It's a simple trade. That this area is a bit resistant, so I would probably lean a bit more towards being bullish in this case. But we have also like a decent target, which is these highs, which is not bad, honestly. Like even though we have these equal lows here, it's just so heavily protected by this resistance. So this is again another good trade that I'm willing to take, honestly. Same like Asian high target. We timed it so bad, but it really doesn't matter, honestly, because we still have like huge all on this trade. I know I would have taken it if I wouldn't have taken it here on the first break higher. I would have taken it on the second. So this looks good. It kind of looks like it's gonna hold and it's gonna start like supporting higher prices of it. It's a very good area to start buying. The only thing that we might get fucked around this trade is timing and being a bit too early. But yeah, as I said, like it just looks good. Yeah, so it's exactly in the same area. This is what is gonna happen many times. Yeah, in terms of placement and where we are in price, it's same R, but this second entry that when we inverse, it's just way better in terms of confluence and safety for the trade. Here, what I would really like is once we close above this previous resistance, that's when I would really maintain high confidence and maybe closure above this overall area. Like if we start closing above this, then I would be really confident that the US30 trade is gonna work. Yesterday I got so chopped by Nasdaq, Jesus fucking Christ. I was on this account, bro. I was 1 trade away from passing it, and I just got edged. My TP was actually like here because that's how much I needed to pass the account, and I just got edged massively, giga edged, and then full stop loss, then reinitiate lower, then I re-execute because I saw, okay, like we're hella going lower, and then it just does this shit and then goes, like it just chopped me so fucking hard. Now I wanted to talk about the model that I traded. Like see, again, like resistance, this was a very good trade I took a couple days ago, which is again resistance, initiation out of resistance, retracement into resistance, London low manipulation, and then I just completely predicted market open. I entered 1 minute before market open and just had this crazy 4-hour trade, right? The resistance is something very important that is massively underrated in terms of, okay, in terms of bias. Many times it's so useful in terms of bias. Second of all, in terms of why your trade fails, right? Like I've seen so many A+ setups that I've had across 4 years of trading, right, that fail because we're trading into resistance. Even this might fail because we're trading into this, right? But most importantly is this resistance here. Okay, you might have an A+ short here, right? The most A+ short ever. Oh my god, I'm shorting textbook liquidity rate, higher time frame, 4-hour, whatever type of bullshit you have, and the sole reason your trade might fail, and most of the time it does, is because you're trading into something like this. This is 1 day of delivery, right? Look how many orders are stuck in there. I want to trade with these trillions of dollars, not against it, right? Even if you have, visually, it doesn't really matter. The most important thing is where orders are in the market, right? Liquidity. And the the areas where most amounts of liquidity are is not below this low. It's here. This is where the most amount of liquidity is. So of course you want to position with liquidity rather than position against it, right? It's obvious. One thing I heavily advise you, and trust me, again, I have 4 years of experience, is start paying attention to resistance. What do I mean by resistance? Consolidation. Like you see, like both of these things, both of these cases I'm using, right, consolidations for my trade. Like here US30, here Nasdaq. Where's the most resistant area? Here in the middle of the range. What am I doing? Buying with that. What am I doing here? Buying with that, right? It's so fucking important, I swear to God, bro. Like, people underestimate how important it is, but it's pure logic. Because if you think about it, the area where the most amount of liquidity is obviously here, right? Because here's where the most amount of orders were executed. Think about it. It's 2 sessions and market open. It's such an area where so many orders were executed, right, across it. Like, let's compare, right? Let's look. You might see this huge bullish momentum. You might see, oh yeah, here's where the most amount of orders were executed, but that's not true. The most amount of orders were executed where price was stuck. So that's what we want to trade with. We want to trade with the area where the most amount of orders were executed, not against it, because that's gonna sponsor so many big moves like this one, right? Because we're trading with the trillions of dollars rather than against it, right? It's so fucking important. I cannot stress this shit. Such a beautiful trade, bro. I love it, bro. I love trading how I currently am. I just love it, bro. I love scalping with full freedom, honestly, because now I just have full freedom. Like, I don't need rules anymore to take good trades on a consistent basis. Like, I just naturally do it because it's so embodied. It's so much repetition. It's naturally, okay, wait for the closure. Naturally, don't get FOMO. Naturally position on the good side of the market. Fine. It just feels so good to trade like this, to have this high of a frequency. First of all, like, it's the biggest advice I would have if you're trying to turn profitable and watching this video right now is trade in a way that you enjoy. Honestly, it's the most influential thing for profitability. Trust. It doesn't sound like it, but it is. By you trading in a way you enjoy, you're gonna have a way easier time on being consistent. Easy for me to be consistent because I don't even get feedback or get my feeling good out of results. I get my feeling good out of the way I'm trading. Of course, there's things like, okay, technically, how are you trading? What type of concepts are you using? And second of all, is your frequency. Is very, very important. The frequency is a very important topic. Honestly, it's very, very important. And for me, I just had like 2 years where I kept iterating my system till I got the frequency that I naturally enjoy. I enjoy participating. I enjoy having 3 trades per session, right? It's just, I enjoy it so much. I love being active in the market. When I was in the break-even phase, I used to have 1-2 trades per week. I traded like that for 1 year, then realized, like, damn, I hate this shit. I don't like sitting on the bench for so many days, right? Imagine you're sitting on the bench like 3 to 4 days. It's just something I hated. I just hate it. Then iterated again, changed my system. Okay, I don't fucking like this. I don't like this at all. It makes me frustrated. It makes me angry sitting on the bench so often. Changed it, became a scalper. Frequency got up to, let's say, like 3 to 5 trades per week, but still it wasn't enough. I had too many rules. I had too many things that were keeping me at 3 to 5 trades per day as a scalper from 8 pairs, which is like crazy. Then I like it, and now I have the best frequency possible for me as a person, which is 3 to 6 to sometimes even 10 trades per day. For most people it might sound like over trading. For me, it's generally how I enjoy trading, right? Like, that's the thing. Some people enjoy having 1 to 2 trades per week, right? I don't. For you might not like it. For you it might be too much, right? It's about how you truly enjoy trading. Just do that, bro. Just ask yourself, the most important thing is not what win rate do you have, not what R do you have, not results. They're not important, trust me. The most important thing is, do you trade how you love? Because by you trading how you love, your results are naturally gonna get better. My system got better every time I made a change that made me love my system more. And my system went from 5 to 10 hours per month to 20 to 30 hours per month to now 30 to 50 hours per month. So it just naturally got better. Win rate stayed around the same, right? But it just got better. 3, 2, 1. Ba, ba, ba. Imagine seeing like a giga bearish candle. Bam! Feels good, bro. I'm not gonna cap. Feels good to hit 2.2R. Bam! We just do this shit every day. I can't say it's exciting to hit TP. Honestly, I do this shit every day. I take trades like this every fucking day. It's not that exciting anymore. I'm not gonna cap. It's not that exciting anymore to take trades like this. I've been taking trades like this at least like specifically like crazy R and crazy book entries like this last 6 months, like on a consistent basis. I just haven't been active on social media to really show you guys the results I've had, but I've been taking this for the like past 6 months on a consistent basis. Honestly, not really that exciting anymore. But yeah, this is a change that previously also, like when I used to trade, I used to wait necessarily for like a 50-minute inversion. That was such a stupid rule. So imagine that like the only area where I would have been validated to take this entry would have been above here on this gap, maybe stop loss below this, and like it's such a bad R, bro. I get 1.5 R and way riskier trade rather than getting a 2.20, legitimately like catching the bottom of the move. Like my R improved because I'm not waiting for 50-minute gaps anymore. It's just stupid. I don't need to wait for 50-minute inversions to spot a good trade. It's just such a like irrelevant thing. Hey, look at this shit, boy. Right, you already know it was a pre-clean day, and yeah, DAX we could have left runners, but it's okay. The only thing I want to illustrate is the lesson of trust and trusting your trade. Right, I had so many temptations of closing because of timing or this or this or this. Right, it made 5% today. If you risk more, it would have been way more. But these are trades that pretty much tend to happen every single day, right? Every single day, and these are kind of like session trades. They're not necessarily like scalps. These are session trades we're holding for the session move, right? The US30 move is basically the whole London session, right? So these are what I would call it, not intraday, but I would call them session moves. Sometimes I have scalps as well. For example, let's say we took this high and I have some very good internal liquidity to target, I'm shorting. This is a good example of session. Scalping is something like yesterday, right? We had external low getting taken, and then I just saw a displacement higher low from here, inversion, and then trading just towards an internal high. We didn't hold towards the whole session move towards internal. This is a scalp. This is just wanted to illustrate that. And yeah, guys, stop trading forex. This shit is not gonna happen on forex, or at least it's not gonna happen as often as it does on indices. US30, Nasdaq, DAX, and UK. Heavily recommended structure is the structure I use nowadays, and it's legitimately blended around my soul. It's so clean. These pairs are so clean. Yeah, US30 or Nasdaq sometimes don't move as clean in London, but they still move very clean. So that's what I recommend you guys, and pay attention, bro. Just swear to God, start paying attention to this, because it's the most underrated concept. It's generally where real liquidity is. You don't need order flow to determine where liquidity is. All you need is just seeing consolidations. Good day today, but this is usual. I'm gonna see you in I don't know, maybe I'm gonna record a bit in New York, but yeah, we'll see.